Most traders struggle to make consistent profits because they have no clue where the markets are actually headed. And that was the same case for me until I learned how to properly do top-down analysis. That allowed me to only have to show up to the charts 15 minutes a day, only look at the highest probability setups, and catch insane risk to rewards. And don't just take my word for it. Here's proof of my last month trading where I made over $40,000 in profits by using this system. And not only that, I use this system to send every single trade to my free Telegram. And if you guys want to see that, I'm gonna leave the link in the description. But let's get right into it. So the very first thing that we have to identify is what is top-down analysis. And top-down analysis is very simple. It's going to be using our higher time frames and allowing them to match up with our lower time frames in order to create the best possible setup. Now, the way that I like to explain this to people is imagine you have two different boxers, right? And one of them weighs 180 pounds. And this 180-pound boxer is going to fight somebody who weighs 110 pounds. That 180-pound fighter is like your daily time frame. And that 110-pound fighter is going to be like your minute 5 time frame. Now, imagine your minute 5 time frame going against your daily time frame. That minute 5 time frame is going to lose 10 out of 10 times. So that's why we never want to use our lower time frame against our higher time frame. We actually want both of these to be moving in the same direction. And when it comes to top-down analysis, there's very specific time frames that the market algorithm actually plays off of. And that's going to be the daily, the hour 4, the hour 1, minute 30, minute 15, minute 5, and minute 1. And now the easiest way to sort these out is to just click this drop down up here and then put a star next to all of them. So instead of having to search for all of them, all your time frames are just resting up here. Now, when it comes to our top-down analysis, we're going to be using supply and demand. And if you guys don't know, areas of supply are going to be the areas in the markets where we have the most amount of pushes on bearish order flow. So you guys can see this right here would be a bearish supply zone. And this rectangle here simply signifies the highest candlestick on whichever time frame we're looking at. So if this is the daily time frame, then this rectangle over here represents the highest candle on the daily time frame. If it were the hour 4 on this one, then this rectangle over here simply represents the highest candlestick on the hour 4 time frame. And it's the same thing on demand, just for buy orders. So if this zone over here were based off of the daily, that would just mean that the lowest candlestick on the daily time frame is this big over here. And if this were going to be the minute 15 zone, then that would mean that the minute 15 lowest candlestick is resting right over here. Now that we've got out the way, I want to explain to you guys levels within the market. So let's say that we had a bearish trending market like this, and then finally we've broken our structure. At this point, what we have is a level 1 demand zone. And now what we want to see is price pull back into this level 1 demand zone and then continue its structure. Now, once we've continued this structure, what we have is a level 2 demand zone. Now, what's very important to find out on here is what lower time frame is the market algorithm playing off. And what this means is, imagine that we had these separate marks right here. And every single one of these marks represents the lowest candlestick, aka our demand zone, but just on a different time frame. So let's say that this is going to be our minute 5 over here. This is going to be the minute 15 resting over here. And this is going to be the minute 30 resting right here. What I have to do is identify what's the lowest time frame where price pulls back into and then continues the structure, because at that point we'll be able to identify the market algorithm. And so in this case, you guys can see the lowest one that we would have touched would be the minute 30 candlestick. So when price already pushes up over here, let's say that this blue zone is still the daily, what I can do is start to look for wherever the minute 30 is resting at, and then look to set limits on this level over here. And the majority of the time, what you'll notice is price is going to come back and continue to play off of this algorithm. Now, when it comes to looking for that extra bit of confirmation, what you guys are going to notice is, let's say that all of this is representing the daily, right? This red drawing of an uptrend is representing the daily time frame. And so you guys can already identify that the daily is in an uptrend. But once I go down to my minute 30, it's not going to be in that same uptrending behavior. What I'm going to notice is that the minute 30 is actually going to be moving bearishly like this. And from this point on, what I would want to see is this lower time frame break its structure to now be moving bullish, and then be looking to use that as my confluence to then go further up. Now, that's very simple right there. And that's pretty much my holy grail to setups. The only other piece that I would add to this is trying to identify whether markets give you some level of liquidity before they actually sweep. So let's say that we had this over here, and then markets now moved into a downtrend. Let's highlight this level 1 zone over here, and then say that markets actually pulled all the way back into this level 2 zone and continued their structure. And now for this example, let's say that markets had pulled all the way back to the minute 15 refined supply zone on this order. What I would want to see in this scenario is price pull all the way back up, start to stagger in this area over here, then almost create a new low, then come back up to sweep this order over here, then look to go further down. Now, what this is telling me is that a lot of early sellers got trapped over here, then price swept them out over here. The hedge funds actually got in on where the market algorithm actually plays off of, and then pushed price low. Now, these are going to be the key components to doing our top-down analysis. And just to summarize this for you guys, these are the questions that you should be asking yourself every single time you're looking to do top-down analysis. It's, are we playing off the daily? Yes or no? Which lower time frame is the market algorithm playing off of? Whether it's the hour 4, 1, minute 15, 5, or even minute 1. Which level are we in? Is it a level 1 order, a level 2, or a level 3? And is there a buildup of liquidity? Yes or no? Now, I'm going to be honest with you guys. The two most important pieces are going to be identifying which lower time frame market algorithm is playing off of and which level are we in. Because as long as you can do these two correctly, even if you're not necessarily playing off the daily, or if there's a buildup of liquidity, you'll most likely be able to catch a very sharp move, even without seeing price make a crazy shift in structure. Now, up next, what we want to do is come over here and create a new watch list. So I'm just going to name this Ollie Trades right here. And then I'm going to show you guys how I actually analyze my pairs. Now, at the beginning of the week, I always go to manage outlooks and I create a new outlook. This way I have a fresh set of eyes across every single pair. Now that I've done that, I just immediately get rid of my volume indicator, and then I come over here and I add all of these pairs. Now I look at every single currency major cross. So as you guys should know, there's 8 major currencies: the euro, the US dollar, the Great British pound, the Japanese yen, the Canadian dollar, the Australian dollar, New Zealand dollar, and the Swiss franc. And so very quickly, all I do is type in USD and then add any of the major crosses right there. I then go to my euro pairs, add all of the major crosses right there. Up next is GBP. Then I go to CAD. Then I go to NZD. And then I go to AUD. And so now at this point, this is what my watch list looks like, right? You guys should have every single one of these pairs. And now I know it looks like, oh, I'm about to have to do a ton of work on the charts, but it's actually a lot simpler than that. So if you guys actually look over here, I have some blue marks across some of these charts. Now, when there's actually a pair that I like, I just simply put this blue flag on it. So I can come over here to my blue list and only look at these ones for the week. This way I'm not looking at any fluff or anything random. I already know from the beginning of the week that these are going to be the only pairs that I look at. I'm not here to bore you and look through 20 different pairs and tell you like over 12 of them that I'm not looking at. So let me just narrow it down to the actual criteria that I look for and exactly how I mark it up. I always start off on my daily time frame. And if I notice that price isn't resting in any sort of daily supply or demand level, I just simply move past it. So here I can see that on USD JPY, if I had a supply level, it would be from up here after we have a break of structure under this level here. And now considering that I have no candle closure under this level and price isn't anywhere near that, I can already tell that there's going to be no setup for me on USD JPY. So I simply move on to my next pair. And as you guys can see, this one is blue over here. I already sent this out to my free Telegram. Like I said, the link is going to be in the description, but that means that there's a good setup here. So if you guys look left, this is going to be USD CAD. And you guys can see we have this level over here where price played into, and then price pulls back in. Then it gives me this supply level over here. Now from this level over here, if I actually go down on my lower time frames, I can see, okay, does price play off of anything refined? Well, the hour 1 refine level is going to be all the way up here. So I can see, okay, we didn't play off the hour 1. Did we play off the hour 4? Yes, we did play off the hour 4. So now that I see, okay, we've played off the hour 4 level, all I have to do from this point on is identify, okay, now I know on the hour 4, I want to see price pull back into this area, and then I can start to refine further lower from there to then look to go short. So what I would want to see in this case is something like this, where price starts to trend upwards, touch maybe like, let's say a minute 15. And then on the minute 15, let's say that we had a structure that looked kind of like this, where price was getting very close by over here. I'd wait for that break of structure and then look to go short off of that level and just simply target the previous lows right over here. Now you always want to look at both sides. So for example, I have a bearish opportunity right there, but if price also has bullish areas that it's playing off of, it's not a bad idea to look at it. So let's say that we have this daily demand level right here, right? And I can see price did break structure towards the upside. And obviously this level didn't continue on the daily, but I can see it dropped very deeply over here. So what I can do is just simply mark a horizontal line right here and then go in replay mode. This way, when I actually go down on my lower time frames, I'm not losing my place on the chart. From here, I'm going to look at my lower time frames. So if I mark up my minute 5, I can see, okay, price doesn't touch on the minute 5. That's very important to know. But now I go to my minute 15 and I can see, okay, price does reach my minute 15 level. So this is very important. Now I can exit replay mode and start to look, okay, what happens after we reached this minute 15 level? And so that first refined daily order that we had comes all the way over here. And then I can see, okay, price touches on the minute 15 over here, and I can extend this to the right. And now on an order like this, what I would need to see is a minute 15 break of structure. If I look over here, I had a big wick over here. So no real breaks of structure until price reaches this level over here. Once price breaks this over here, I have my real break of structure. The reason being is because I don't value wicks as breaks of structure. I value them as pushes of structure, meaning that every time we have a new wick like this, I now need to see price close above that wick. So you guys can see price just kept giving us pushes in the market until we finally had that break right there. Now, after this break over here, all I wanted to do was wait for price to pull back. And like I said, one great thing that we can have is price almost tapping in and then running away. So you guys can see price almost taps in, leaves us with this liquidity right here, and then pushes away. So now if I extend this out to the right, you guys can see markets actually tank straight into this area, still hold this zone. I mean, look, I'll expand it as much as possible and then sprint all the way up. Now, the actual areas that we want to target are going to be the areas where price just fell from. So for example, on an order like this, what I would want to do is have my limits set right here. Now, the reason why I would have my limits set is because I already saw I had a daily level 1 get respected. Then I had a refined level 2 get respected. And now this was my level 3 order with liquidity being rested. So the area where price immediately fell from can be seen as this level right here. And that's a 1 to 6.22 risk to reward ratio. And now for me, what I like to do is set my alerts right above my zones right before they play into there. That way, when price actually gets near my level, I can decide either A, I want to wait for another confirmation, or B, I can look at the charts to identify my take profit level. Because like I said, I want to target where price just fell from. And so now we take a look at USD CHF, and you guys can see price over here is not resting near any supply zones or demand zones, right? If I have my supply, it's going to be all the way up here, and my demand zone would need a break of structure to happen over here. So I'm still very far away from that. And that's going to be another pair that I don't end up trading. And now instead of showing you guys a million pairs that I don't end up trading, I'm just going to simply go to my blue list and show you exactly how I mark up the pairs that I do find interesting. And so here I have Euro GBP, and you guys can see price has this supply zone right here. You can see we have a clear break of structure towards the left over here, and then price continues its structure on the daily time frame. And so from this point, what I want to identify is what time frame did the markets play off of for this order over here. Now, if I go to the hour 4 time frame, I can see, okay, price didn't touch on the hour 4, meaning that price continued off the daily time frame. So what I could have done in this area here is set limits either off my daily level, but to me, that just makes no sense. I always want to find a refined order. And so what I wait for is for price to give me some sort of pullback, touch onto a lower time frame confirmation, and then give me a break of structure. So you guys can see I've marked up the hour 1 time frame, and this would be my hour 1 refined order. Does it touch that? No, it doesn't. So now the next best thing is going to be my hour 4. And if I look over here, price still barely misses my hour 4. So at this point, all I'm doing is setting limits right at the hour 4 zone. So if it actually reaches that level, then I can start to look for what confirmations I need next, where my breaks of structure would be, and things like that. Up next, we have GBP CAD. And if I go to the daily time frame, you guys can see we have a level 1 daily demand zone resting right here. And yes, price is slightly in it right now, but there's no real move for me to take. I still want to see price reach some sort of lower time frame. So what I can do is mark this out over here and just simply mark it as my hour 1, add an alert right there, and do the same thing for my hour 4. So at least if price reaches these levels over here, then I'm aware of the market, and then I can start to look, okay, where would my breaks of structure need to take place? But if I go back to the daily, I'm going to try to see, is there any selling opportunity? Well, if there was, I would need a clear break of structure towards the downside. But since this level ran straight through that, there is no clear break of structure for me towards the downside that was respected. So on an order like this, I can already eliminate sells for the week. I'm only looking to go bullish. Next, we make our way to GBP NZD, which has this level of supply over here, and then price actually respects that level, and you guys can see another daily break of structure towards the downside. So right now we're playing into a level 2 daily zone, and I'm just going to make my way down on my time frames to identify, okay, is there going to be some sort of confirmation? So if I mark up the hour 4, I can see, okay, this is respecting the hour 4. Does it touch the hour 1 refined supply? And my hour 1 refined supply is going to be resting up here. So when I go right, I can see, okay, we haven't touched the hour 1 refined supply. So I'm going to set an alert on that level there, and I'm also going to be waiting for a clear break of structure on the 4 hour. And a clear break of structure on the 4 hour isn't going to happen until all the way down here. So now I have alerts set on both of these zones, and I'm just patiently waiting across the week for either one to play out. And if I actually analyze this market structure over here, I can see we had a low over here, a high, a higher low, a higher high, and a lower low. So in order for me to have a bullish order, I would have needed to see a break of structure towards the upside, and then price want to pull back into this level over here. But that just seems extremely unlikely that it's going to happen this week, considering this is the daily time frame. So I'm really just only looking at sells on this play. Now here's NZD CAD. Now if you guys look at the daily on NZD CAD, we have a beautiful push towards the upside. Now this push towards the upside leaves us with this little demand zone over here. Then I make my way down to my hour 4 and I check, are we playing off the hour 4? The answer is yes. And I just go all the way down on my time frames until eventually I find the lowest time frame that we are playing off of. So here I look at my minute 5 and I mark this level up over here. Now at the same time, what I'm going to do is mark up my level 1 order. And my level 1 order is going to be right over here. Now when I exit replay mode and I go back to the live markets, I can actually see where price is. We had the minute 5 order over here, followed by a very clear break of structure. So you guys can see price tapped into our minute 5 order. And if we follow the structure patterns, right, we can see we had a low over here, a pullback, lower low, pullback, lower low, pullback, enter our minute 5 area, then break structure. So at this point, I had set limits right at this level over here. And you guys can see this is literally the start of the market. I mean, the markets were only open for 4 hours before this trade got played into. So you guys can see we have this level over here. And then now we can target like these highs resting over here. And just to show you guys proof, I'm actually in on this exact setup on my live account right now. And it's something that I had sent in my free Telegram like I always do. Now, another thing that I had noticed is, okay, price continued structure off the minute 5. So at that point, what I would want to see is if price is going to possibly pull back into this area to give me another confluence to go long. Now, you guys can see price barely misses that level and then continues higher. But that could just be used as a level of liquidity that price wants to sweep later on to then continue to go long. And that's why it's really important to make sure that you guys do this right at the market open on Sunday. So that way you guys can make sure that you're on top of these setups and really just be there when you need to be. Up next, I'm going to show you guys AUD JPY. And as you guys can see, any bullish order kind of seems like it's in no man's land. But if I actually look left over here, I can see, okay, I had a daily level 1 zone over here. You guys can see that plays into and then continues further lower. So that means I have a daily level 2 zone resting right over here. And I'm just going to extend this to the right. And all I want to do from this moment on is identify which time frame is price actually playing off of. So if I mark up my hour 1 over here, along with my hour 4, I can now go back to where current market is and see if we're touching off of either one of them. And so here you guys can see price is touching off the hour 4. So what I would need to see is a break of structure on the hour 4. So a level like this would have been a break of structure had I had this candle close under this. But like I said, these to me are just considered pushes in the market. So now I need to see a candle closure below this level over here. If I were to receive that, then I would now highlight this zone over here. And this would be my level 3 refine zone that I would then be looking to take orders off of. And last but not least, we have NZD USD. Now I know that I really heavily stress playing off of the daily time frame, but in this type of order, we have price push up over here, really heavily pause in this area, and then push up again. Not only that, but we also have other NZD pairs, which we have a bullish bias on, such as NZD CAD longs or GBP NZD shorts. So with all of those confluences together, I'm able to look at an hour 4 zone like this. So if you guys look over here, this hour 4 zone over here would be considered a level 1 order. And if I start to refine that hour 4 zone, I can really identify where is the market algorithm playing off of. So here I can see we're touched in on the hour 1. If I go to my minute 30, well, my minute 30 is resting all the way down here. So I'd simply put this over here, add an alert on my horizontal array, and wait to see if price either plays off of the minute 30 or if it's going to break structure on the 1 hour. Now, on the other hand, considering that I do have this daily zone resting over here, it would be a good idea if price actually sweeps through this level to wait for some sort of confirmation. But I want you guys to identify, like, this might not be the best setup for us to take, because you guys can see there's no clear candle structure above this that gets closed in on. And this is simply using other confluences to piece one trade together. So this would be a more rare setup for me to take. But at the same time, I do understand that if I have the right confluences, it doesn't necessarily mean that I have to be playing off of the daily. And it doesn't necessarily mean that I need the liquidity buildup, because I'll still be able to catch some sort of move that could play out for like a 1-to-5 risk to reward ratio. If you guys enjoyed this video, make sure to like, comment, and subscribe. And don't forget to join the free Telegram if you guys want to see all of my markups every single Sunday. Get sent out 100% free. I don't sell a course or anything. I don't upsell you in there. And as always, guys, I'll see you in the next video.